Stop thinking you know where the market's going to go and let it tell you instead. Right now, this is one of those moments where the market feels heavy. Bitcoin is back at a level that I've been talking about for a while now, and Ethereum is reacting exactly where we expected it to react. And price is once again coming back into our zones. Not random levels, not historical guesses, but areas we've been watching ahead of time. Nothing is resolved yet, but the structure is beginning to speak.
Let's go!
In this update, I will walk you through what just happened on Bitcoin across the weekly, daily, and lower time frames, why this rejection matters more than most people realize, and what levels decide whether this is just pressure or something much more important. Then we'll move into Ethereum, where price again is interacting with a level that we mapped out earlier, and I'll explain exactly how I'm thinking about it without forcing anything. But before we go any further, make sure you like the video and subscribe if you haven't done so, and let's see if we could reach that special objective that we have here. I need 25 likes, people. Help me out. It really helps. I really appreciate it. Do it. Do it now. As you guys know, I'm running a public trade challenge where I'm growing an account from $10,000 to $100,000. I'm not here to trade every move. I am not reacting to every candle. I'm sitting on my hands and letting the market come to me. All trades, updates, and ideas, all the details are shared live in my free Telegram channel, which is linked in the description. Make sure you check that out. But before we go back to the charts, we need to talk about the broader picture because this move isn't happening in isolation. Just today, Tom Lee said live on CNBC that Bitcoin can go nuts once gold and silver start to cool off.
But of course, that is just a leading indicator, right? Because when gold and silver take a break, then, and in the past, that would lead to a Bitcoin and Ethereum surge afterwards.
Now, whether you agree with that or not, what matters is where that narrative is coming from. Hey, Frank, you love this guy. What do you have to say about it? Oh, me try to call him on phone. He hung up on me again. Why do you think he hangs up on you? Me don't know. Maybe you should be nicer to him on the phone. I'm a dial. Historically, when capital rotates out of defensive assets like gold and silver, it looks for the next asymmetric opportunity. At the same time, over 60% of U.S. banks are preparing to offer Bitcoin access to everyday Americans. That's not traders. That's not cryptocurrency native users. That's hundreds of millions of people who previously stayed out of Bitcoin because of trust and infrastructure. This is how adoption actually happens, quietly, through rails that people are currently using. And while everyone is focused on short-term price action, something else is going on that's unnoticed here. It's very important. China is close to overtaking the U.S. as the largest Bitcoin holder, even though they're maintaining a nationwide cryptocurrency ban. That is important because it shows that accumulation doesn't always look loud. Sometimes it's contradictory. Sometimes it happens while the narrative is still being very confused. So right now, sentiment is heating up. Headlines are getting louder, but price is still at a decision point, a very important one. So beginning with the weekly time frame, there's something very important going on here that you have to pay attention to. This red trend line, you see this trend channel here? Well, this red trend line was broken. Not only was it broken, but it retested and it rejected with a bearish engulfing candle. This is bearish, but it's still too early to call this a change of trend. I know there are a lot of people out there saying Bitcoin is bearish. You're nuts if this is bullish. I understand that argument. But the thing is, what this is lacking is confirmation. So 88K is a major level, right? 88K price has been fluctuating around for quite some time. Right now, we're fooling around 88K, 89K, around there. Price has tested below 88K, but it doesn't stay there for long, right? So the key is this. As long as price generally stays above 80K, then this thing may form a double bottom. It's very possible we could form a double bottom. And when you get a double bottom situation, you get what's typically called a failed low. And if you get that failed low, this thing can rally back up toward that trend line, which should actually act as a resistance level on the way back up. If we break above the 95K, then that changes the structure back to bullish. Then that improves the bullish argument once again. But if we probe below 80K and we stay below that for some period of time, could be days, it could be longer, then that opens the possibility for a test of the 60K area. And that 60K area is another major support. Also, above that, we have the 73K area. Those areas will act as major supports if 80K is cleared. If it is not cleared, then you can't be caught with the idea of thinking that the market is what the market's going to do. You have to let the market prove what it's going to do, and that's the way to do it. Now, let's take a look at the daily time frame. And as you can see here, we have some structure developing that actually tells a bullish story, much more bullish than what the weekly time frame looks like. And that's why you have to pay attention to levels like this. So first of all, we have this key level here around 89,733. Right now, price is still fluctuating below that. And here's what it needs to do. In order to reclaim the bullish bias, we need to close above that 89,733 with conviction. And if there is any type of massive breakout followed by a retest, that's the confirmation you need to see, which can take this thing back toward the 95K resistance, which was up here, which is where we failed from. Now, a couple of interesting notes that you need to pay attention to. First of all, we have this order block below and we have this trend line. Not only that, but this structure is a double bottom. You see that? It's a double bottom structure, which is actually a very bullish structure. This is, again, why you can't think for the market and you let the market show its hand. Once we close above that 89,733, that is your first piece of confirmation. Now, on the other side of that, if price goes into the order block and actually breaks below and closes below, now you're looking at the push toward the 80K. So this order block that you see here is a major decision point for Bitcoin on this time frame. And as long as price stays above that, the bullish bias has legs. So we need to close below 80K. Keep those levels in mind because those are key levels. Now off to the 4-hour time frame. Now, this is very important because remember, each time frame is going to have its own set of relevant levels. You need to pay attention to these because as these levels are tested or broken, then it should be changing your expectations for that particular level. And then as these levels continue on the larger time frames, that's really what shapes the path for your expectations, and you can adjust your risk and your profit objectives in that way. So looking at the 4-hour time frame, here's some key notes you need to pay attention to. Price broke this trend line support briefly. It consumed some liquidity lower and bounced off of it. This structure is a typical reversal type of structure. It is a failed low. And a lot of times when it consumes that liquidity, when it's near a previous low like this, it's a very powerful reversal signal, believe it or not. Now, not only that, but you have a little higher low that's developed as well. This thing is not looking bearish on these smaller time frames. The momentum currently right now is bullish. If this key level above, we have a supply level above here, if that is cleared, the 90,632, that puts this time frame back on bull mode, the 4-hour time frame, which gives you profit objectives around the 93 and 95,000 areas. But 93 would be your first. Right? And if you get a close above 93,000, then that really opens the door for 95,000. Now, let me quickly update you on the trade challenge because this part matters. With the most recent move, we have now taken 3 trades. Out of those, 2 are winners and 1 got stopped out. What are you going to do, man? That's what happens, which puts the win rate at 66.67%. And this is where most people misunderstand how this game works. The goal is not to avoid losing trades because they're part of the game. The goal is to control them. On this trade, the loss was just 0.5%. A mini stop. Remember, I never took the full position. Watch the most recent videos before this one. I specifically talk about why I took that 0.5% and what the benefit to that was. This is the benefit. When you get that type of pullback and it stops out, you lose a lot less, right? But on the winning trades, we're capturing 2% or more. That is the key. Now, let's talk about Ethereum on the daily time frame. As you can see, price broke the order block briefly and then reversed back above. You have to understand these situations can be very tricky. And if you think you know where the market's going to go, you can easily get yourself caught in one of these situations. And then you refuse to believe that this thing is actually bullish. But you have to understand the Ethereum general structure has never changed. This thing has always been basically range bound to slightly bullish. And this order block situation is another piece of evidence that points to that. Now, in this situation, price briefly probed into this 2772 level. It is a double bottom, triple bottom. There is liquidity here. It was consumed, and this has been a important key level. As long as price stays above this level, the bearish argument doesn't carry much weight. Now, at the same time, if 3100 is cleared on the bullish side, that's going to add a lot more weight to the bullish argument, and this thing is poised to push that. So again, another level to keep in mind. You don't want to react to these levels. You don't want to think, because remember, I am not thinking I know where the market is going here. I am letting the market tell me, based on its structure, what the probability is of a particular type of outcome. And this right now is poised to go higher. All of the structure here favors that. So let's go to Ethereum on the 4-hour time frame. Now check this out. So initially, I took that 0.5% trade inside the order block. I had the whole explanation of that in my previous videos. Now, that was for the possibility of this scenario, right? Price probed lower. It went into this 28.49 area, right? The 0.5% position got stopped out, no problem. But now I can still, this trade idea is still relevant. And if this thing pushes back above 3,100, it can justify taking the other 0.5%. So while 0.5% was stopped out, I still have the possibility of getting into the other 0.5% and realizing a winning position, a winning trade. That possibility still exists without being stuck in a position or having to sweat a position out. That was the whole point of scaling into half, seeing what happens, and now the market is still valid. This structure is still valid. So this is where we stand right now. Bitcoin is under pressure and sitting in a major decision point. Not collapsing, but not showing any strength yet either. Ethereum is also maintaining a level that historically matters. And how price behaves here will tell us a lot about what comes next. Nothing is confirmed, and that is the point. This is the phase where markets stop being loud. This is where they start being honest. Most people are reacting. Most people are thinking they know where the market's going to go. I'm simply watching and letting the market reveal its hand. By the way, all trades in this challenge are done on WeX. Everything is tracked transparently using Profits Precision, and all updates are shared live inside my free Telegram channel. Links are in the description. Make sure you like the video, subscribe, and share if you found value. Otherwise, I will see you in the next one.